Hey guys, how we all doing? So today I wanted to break down a trade that I took on Wednesday that went for 34R, so a risk to reward of 34 to 1, and it was quite simple. It just required quite a lot of mental power to hold it. So let's break it down for you guys. So on Tuesday we had buy side liquidity swept. So once we had the buy side liquidity swept, I was expecting now sell side liquidity to be swept. So that already gave me the bias that we are going to be bearish or moving bearishly. So this was actually a news event. So that was this large spike. And I actually called out to my group chat on Telegram. So if you want, feel free to join that. It's completely free. So I told them I want to see news take this out. That's where I'm expecting it, and then I'll get a trade. So yeah, I'll go into this very quickly, but yeah, I managed to catch. So once we took out these highs here, I basically took my entry from this order block, stop loss right there, and entered there, and then I targeted these lows over here for 5R or something like that. But anyway, going on to the main point of the trade was, so we had on Tuesday news come, take out all this buy side liquidity, and we had a major break of structure here. So ICT says that the high of the week will normally be formed on a Tuesday or Wednesday. So this shows me that this is likely going to be the high of the week. We took out major buy side liquidity. We're going probably to take out sell side liquidity, news event, major break of structure. If you know market maker buy models and sell models, this is the buy side of the curve, smart money reversal, boom, and now this is the sell side of the curve. So all down to here, we can be looking for shorts, and just selling this down to take out sell side. So yeah, that was Tuesday. Then coming into Wednesday now. All right, so we know we're bearish. We've got, so Tuesday started, London. We had a major break of structure here. So we now have a stop hunt. Whoops. Stop hunt on these highs, breaking these lows, major break of structure. So now I'm expecting that price will hold this range and sell. So this is my range from here to here, just so you guys can see. Take my fib tool out. So we know we want to be taking sells in premium. This fair value gap was the one I was looking for price to tap into. And yeah, basically it was just a patience game, waiting for price to come in there. Sorry, from this low will be the range. So waited for price to come in here. You could have caught some buys in here, taking it up to there. Reason we had a reaction here and went lower a bit was because we took out liquidity. And then we come and we tap into the fair value gap. Once we tapped into that, this is what I want to see. I want to see a reaction, and a strong reaction. I'm not really into taking trades like looking over here and trying to enter off something. I want to see the reaction I get. So we tapped into it, and then we had a heavy drop. We broke structure here, major break of 1 minute structure. It was not just there, it was also here. On the 5 minute, we can see that is a 5 minute break of structure. Okay. Yeah, next was looking for the area that I was wanting to enter off. Well, again, we can look for our range. So premium discount, anything in premium, so above the 50% I'm looking for. This makes this liquidity then this high because I need it to go above that. So I can remove this now, and I know I'm taking trades above here. So the closest one, we've got these up candles before the down move, so that's your order block. We have a fair value gap here. We have this order block kind of candle as well. So this was where I was wanting to take a trade. I wanted to see how price was getting there. We go to a 5 minute. You can see there was also this 5 minute fair value gap there. So that was the 5 minute fair value gap close. So we've got a lot of confluence with this trade and an order block. So like many bits of confluence. Then I wanted to see how price was retracing, but it was out of kill zone, which is 2 a.m. to 5 a.m. New York. So I set an alert because I was busy after 5 a.m. or 5 a.m. New York time at least. And by the time I got there, I didn't have time to set my entry. And then I saw price react. I want to see again how it moved. I saw how it just perfectly touched this. Price had no reason to go any higher because it took out the internal range liquidity of the range from here to here. So once I got this here and I saw these candles just respecting it, I simply entered on here at 70 and my stop loss was 90, I believe, something like that. And this I took on, this is on my Telegram channel, by the way. So if you want to see the live executions and holding it through on MT4, check it out there. Now, where are we holding the trade? So if I was trading normally, I'd probably take major partials here, or even close the whole trade because, I mean, why not? 13.5 R, it's pretty good. But I really wanted to test my mental strength. So instead, I wanted to hold it for the daily sell side liquidity area. So over here, this is where I'm holding it to. So you can see was about 35 R. And yeah, that was that. So now, once I entered, it was a bit after kill zone, but I had to go for it and see, and I just wanted to take it. It was too good. It was offering too much. And so now, instead of watching the 1 minute, we can play it forward like this. And you can see that, so in this area here, I was asleep, so I didn't get a chance to even see it come back. And when I woke up, I was already around here and I saw it retracing. But I trusted my analysis. I was just worried that maybe it would tap me out at break even before falling, which is why it's very important to take partials at smart areas. So here, these lows, this low, and then there. But this was more testing my psychology, like I said. I wanted to see if I would be able to hold it all the way down. So in here, you would have had more opportunities to get into a short position. See, tapped into this order block, drop, broke structure, enter again, and then price went down and beautifully tapped this out. So if you guys enjoyed the video, please give it a like. If you have any questions, hit me up in the comments, and if you're not subscribed, subscribe. Bye.